Hello everyone. Thank you for joining us today and welcome to this presentation of the correct way to trade pullbacks. Welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. And for those of you who are not familiar with our website, we are first and foremost an educational company. We provide all of our students and members with the tips, techniques, and knowledge and the trading strategies that I've accumulated in my 37 years of trading. These are techniques and strategies that I currently use myself. Now, for those of you who are familiar with us, you'll know that we do provide strategy signals for all of our members and students, but our philosophy is more about empowering you with this information, teaching you how to trade. So this is what we're going to do today. We're actually going to be sharing with you a great way in which to trade, or what we feel is the correct way in which to trade pullbacks in any market and in any time frame. Now, before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view our disclaimer, I also want to invite each and every one of you to follow us on Twitter. We post signals, we post information, we post daily financial wisdom on a daily basis. In fact, for all you currency pair traders, we posted a great signal the other day, or yesterday I should say, in the British pound, and that has gained over between 80 and 100 pips in just one day. And if you're trading one lot, that comes anywhere from $800 to $1,000. So we post strategy signals and information on stocks as well as the E-mini markets as well. That's our handle right there. Once again, follow us on Twitter at SPCLSTTRADG. Now, just to give you a little bit of background about myself, for those of you who are new to my presentation, I've been trading for 37 years. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist for DLJ. That's where we get the name Specialist Trading. Specialists were those traders who used to stand behind those large platforms, and basically if you wanted to buy or sell an equity, you had to go to the trader who specialized in those stocks. So I was in charge roughly of about 50 stocks. I traded through the crash of 1987 and the bull market that followed afterwards. I've seen and traded just about through every market imaginable, every market environment, every trading strategy and system and technique. I've tried them all and traded them all, so I know what works and what doesn't work. I left the floor in the mid-90s to manage money, to pursue my own trading, and about 7 years ago I started Specialist Trading, where all I do is educate my traders with the things that I've accumulated and what I've seen works over time. Now, the sad thing is that it's been estimated anywhere between 80 and 85% of all traders will ultimately fail. And when I say fail, I don't mean that you'll go into some type of a drawdown. It literally means that you'll lose all your money that you put aside for trading. And this is a sad statistic, but it's true. It's our opinion at Specialist Trading. It's the reason why is because we're holding on to what conventional wisdom tells us how to trade. Things that for some reason we've been taught, we hear in chat rooms or seminars or educational packages, but they really don't have any consistency to them. They'll work just in time for you to start trading them and then they stop working. I'm sure a lot of you are familiar with that. So what we do at Specialist Trading is give you the education with things that have consistency. We're not promising you that every trade is a winner. We're not giving you any statistics or any type of numbers telling you that this will produce 1,000% in 1 month. We don't believe in that because we really don't feel that that's true. What we do is provide you with sound information, and then we help you mold it so that you can empower yourself and be in charge of your own trading destiny. So this is my goal at Specialist Trading, to teach you, not to trade for you, not to tell you what to buy and sell the way so many other educators do, but to teach you how to trade with the specialist edge. Okay, and that's what we're going to do today in this short presentation as well. Now, here's what you're going to learn today. Since this is pretty much a classroom, we're going to start off by sharing with you the wrong way to trade pullbacks. This is the way we've been taught. This is the way most traders trade pullbacks, and I say this from firsthand experience because this is the way I used to trade pullbacks. And then we're going to share with you a simple but high probability technique for trading pullbacks in all markets and in all time frames. All right, so get out your pencils and paper. Now, a few things before we begin the class. Remember, since this is an educational class, please hold your questions till the very end. I won't even open up the box that has all of the questions that are submitted, so I won't even see them if you ask a question. So please wait till the very end to ask questions, and we'll reserve the last 10 or 15 minutes for all of the questions. This won't be very long. We'll get to them in about a half an hour from now. Also, probably the most pertinent question that's always asked is this being recorded? Yes, this is being recorded. so you can request a link to this recording if you have to leave early. But we're going to have a lot of great information, so if you have to leave early, I would definitely get a link because there's a lot of great information here. Okay, having said that, why don't we begin? Now, in order to trade pullbacks or virtually any type of strategy with consistency, we need to be in a trend. Now, this is an ideal scenario here for an uptrend where you have a kind of stair-step approach. And then here, conversely, is the ideal scenario for a downtrend where you have a downward stair-step approach. So how do we trade pullbacks? Because we can only trade pullbacks within the trend. A trend is required in order to trade a pullback. Well, usually pullbacks are based off of some type of format, some type of parameters where we see in an uptrend we have a sell-off and it meets all of these requirements or rules and then the trend resumes upward. So what we try to do is mimic this format or these guidelines, because when we see the same scenario happen again, well, that's when we want to jump in and buy, because after all, it worked here and it's more than likely bound to happen here again. So this is a scenario where you would most likely jump in. All the parameters are the same as they were before. Either there's some level or some support or something that you have your buy setup based off of on the pullback. So you jump in and guess what? It continues to go lower and lower and lower and it turns into a big sell. Does this look familiar to anyone? I'm sure it has. This is the way I used to trade whenever I tried to pick pullbacks. Or the same scenario will happen to the downside. You'll have a perfect pullback to the upside, a rally. In this case, since we're in a downtrend, you're looking for some type of a bounce in price. And it'll meet all the parameters, say some Fibonacci level or resistance, and then the trend resumes. And then when you see all those parameters and requirements met again, well, then you decide to sell. So you jump in, and it doesn't work at all. It continues to go in the opposite direction. Well, let's look at what most people tend to use when trading pullbacks and where you get a lot of this environment happening all the time, where there's really no consistency. Probably one of the most popular techniques is support and resistance. This is where you're looking at some type of support based off either volume or where the institutions are coming in, something that is supposed to tell you when price will hold and when price will stop moving in a certain direction. If we look at this generic chart here, this is just an ideal situation of resistance, support, resistance, support. Obviously, you want to be purchasing on the support, which is the pullback area in that uptrend. The reverse would just be for a downward pullback. So if we look at this generic chart here, this mimics what we saw earlier, perfect support and resistance. You see this kind of a stair-step approach. So let's say you've read all the books, you've attended the seminars, the webinars, you purchased the course, you're all set to go, and you decide that this is the support. According to all the rules, what you've studied, you're looking at all the institutions, that's your support level. So you place a limit order to purchase there, and it doesn't hold. So you're thinking like, boy, I thought it was supposed to stop right there and make some type of a double bottom. But then you go over your material and your requirements again, and you see that this actually could have been the support. So you double down and you place a limit order here to buy more, and you feel very strongly that it's going to hold at these levels, and look what happens, okay? You see, there's no consistency in using support, conventional support and resistance type of trading, because one trader's support is another trader's resistance. It's too subjective. In other words, we want things that are more cut and dry, where two people will look at the same chart and come up with the same conclusion. It's the same thing with Fibonacci levels. I know there, just as there are some traders who make good money trading support and resistance, there are also traders that make good money trading Fibonacci levels. The only trouble is it's very difficult to teach to the masses. Why? Because only a few people can get it, where the majority of us don't see these levels. I know personally when I've tried to trade Fibonacci or support and resistance, there's no consistency. Let me show you an example here. Let's just say we're looking at this generic chart and you decide that the trend is down. Okay, so Fibonacci tells us that we will have some type of pullback, we'll meet some type of retracement at probably one of the most popular levels is the 62% level. Okay, so in other words, we are retracing or pulling back 62% of this initial downward move. So you decide to jump in and sell there. After all, this is the where your course tells you to go short, and hey, it works perfectly. So you're all excited. This is working really well, and we're still in a downtrend. So we see here that if price starts to rally again or bounce, we want to sell again at a 62% retracement. So we get up to that level once more, and you decide to sell, and it really doesn't go down, but that's okay. You feel strongly that it worked before. it's going to work again, and then look what happens. Okay, you give everything back, you've lost on this trade, and once again, there's no consistency. Remember, we want two traders, totally different backgrounds, totally different experience, to come and look at the same chart and come up with the same analysis. We do not want someone to say, well, there's support here. No, 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 there's resistance here. Or, well, I would take the 62% level of resistance, or I should say Fibonacci level, and someone would say, no, I would take the 75 or the 50. See, we want things to be cut and dry. Now, here is how we feel you should view correct pullback entries, because entering a trade based off support and resistance and or Fibonacci levels, this is similar to picking tops and bottoms. They're extremely difficult techniques to master because they are very subjective. As I stated, I know a few traders who do very well trading these techniques. But remember, if something is really that valid and consistent, everyone should be able to trade it well, and that's just not true. So in order to have a high probability pullback entry, one must wait for confirmation. Rather than trying to pick a bottom or top and holding and praying and hoping that it's going to stop at these levels, wait for confirmation that the pullback has concluded and that the market is headed back in your desired direction. So what exactly does that mean? Well, if we look at this generic chart again, this ideal situation, we see here that the initial pullback happened at this level and it worked perfectly. Now, rather than just hope and pray that it's going to meet the same requirements and stop right here, either the same Fibonacci level or same support requirements, let's wait before we place a limit order. Let's wait for confirmation. In other words, some sign that it's going in our desired direction, and then that's when we jump on board and buy, and we put the odds in our favor that we're going to continue. You see how we just increase the odds to have a successful trade rather than picking a bottom. That support will happen right there. Works the same way in a downtrend. Here were all the requirements meant for a valid pullback to the upside. Rather than just hope and pray that they meet the same requirements and you just place a limit order to sell, let's wait for confirmation that we're headed in our desired direction, and that's when we jump on board, and then hopefully we'll have a high probability trade in our desired direction. So this is what we want to do. We want to wait for some type of confirmation rather than just placing a limit and just hoping that it stops there at the desired support and resistance level or the desired Fibonacci level. So what is confirmation? What are some of the best techniques to use for confirmation? Well, here's, in our opinion, some of the best techniques, and we apply these to a good portion of our strategies and techniques at Specialist Trading. First one is you want to wait for price to trade above or below the previous bar. So let's just say you really believe in support and resistance. We can't talk you out of, there's no consistency to it. So you say, I still believe that there are certain support levels and resistance levels. Okay, rather than just place a limit order at the so-called support level, wait for price to trade above the previous bar if you're going long or below the previous bar if you're going short. So in other words, if this is the support level that you're looking at, if this is where we're looking at that price should hold, rather than just buy at the market or place a limit order, wait for price to trade here. And if it continues to go lower, that's okay. You'll just continue to move this down until it trades above. Whereas if it trades above, well, then you're in, okay? How about, excuse me, using a candlestick pattern? Since candlestick patterns are widely used as reversal type of patterns, this will oftentimes tell you that you have reversed the direction of the pullback and it's time to get in. So as we see here, the same scenario, let's say this is your pullback and this is a very popular candlestick pattern. It's called a bullish engulfing pattern. This is a very common pattern to go long, so you could apply this in this scenario as well, or any of the many valid candlestick patterns such as a morning star or a doji, anything that you rely on as a candlestick pattern. And then lastly, you can use an indicator. A lot of people like to use overbought, oversold types of tools to tell them that the market has concluded its downward move in an uptrend or concluded its upward move in a downtrend, and now it's time to get in. So if you just apply, in this case, we just applied a standard stochastic oscillator at the very bottom, and you see here when the lines crossed in the so-called oversold territory, well, that would be your signal to jump on in. So these are nice confirmational tools to tell you that a pullback has concluded. In this example here, this is a pullback to the upside. In other words, we're in an uptrend and we want prices to go back up. But we could just reverse these rules and use them if we're in a downtrend and we want price to go back down. So any one of these, as you see price trading above, a candlestick pattern, or the indicator telling you that the sell-off or the downward move had concluded, would initialize some type of nice confirmation to get in the trade. And you see in this instance, it worked very well. Okay, so these are all valid ways of using confirmation, of getting into a trade. But what is the correct way to trade pullbacks? Because we feel there's even a more valid and more consistent way to trading pullbacks. As I stated, these techniques are very good. They're not great, but they're very good, and you could start applying them as early as tomorrow if you like. But we feel there's an even more consistent way in which to trade pullbacks, and that is by simply applying our PET-D tool. This is the proprietary color bar algorithm. So let me show you how it works. If you have a series of green bars, it tells you that the trend is up. If you have a series of red bars, it simply tells you that the trend is down. And we're talking about a short-term time frame. We're not talking about the trend going back weeks or months or years. We're just talking about the short-term trend looking back maybe 20 or 30 bars. Okay? So how do we use this if we want to confirm a buy pattern? In other words, an uptrend, and we want to conclude and confirm the pullback to the downside. Well, in an uptrend, you're going to see a small amount of red bars that are going to appear. This is just simply the pullback. All right? Now, the next green bar that occurs after these red bars is our confirmation for a buy entry. That's telling us that the pullback has concluded. So if we look at this older chart of Facebook, we were in an uptrend. Price was going up. We were in an uptrend, and all the bars are green. As we started to sell off, this is where the pullback began. Now, the overall trend is still up according to our other proprietary tool. So we're not thinking that a brand new downtrend has begun. We're just in a pullback phase. So now all we do is sit back and wait for an up bar here that is colored green, as we see here. So this is our signal to enter, and look what happened. See how simple that is? We don't have to rely on any news. We don't have to see what all the institutions are doing to tell us where a support or resistance level is. We don't have to study and figure out what Fibonacci levels to place our orders at. We just simply wait for the bar to change colors. Now let's say the trend is down. Okay? In a downtrend, a small amount of green bars will appear. That means price is moving up. This is just simply the pullback. Now, the next red bar that occurs after the pullback, after the green bars, is our confirmation for entry to go short. So as we see here in this 5-minute chart of the E-mini, we are in a downtrend, according to our proprietary other tools that we share with you in our courses. We're in a downtrend, and also the bars are colored red here on the short term. Now we start to change to green, so this is telling us that a pullback is in place. Why a pullback? Because the overall trend is still down, so most likely this is not the beginning of a new uptrend, it's just simply a pullback to the upside. So we wait for the first red bar to appear, which is right here on this 5-minute time frame. So you would simply jump on in at the close of that bar, go short, and then look what happens. Okay? Now later on, about an hour or two later, you get another scenario, the same exact scenario, another pullback occurs. We're still in a downtrend, so we're not thinking that we've bottomed out. Most traders would think and go, oh, the trend has changed, we've turned green, so it's time to get long. No, our other proprietary tool, the buy-sell line, will tell us that the overall trend is down. So this little blip in price is just simply a pullback to the upside. We wait for the first red bar, that's our signal to go short, and look what happens. So you see this happen time and time again. It's this simple and this easy, and most of our traders who use this two-step approach swear by it now because it makes trading so simple. All right, let me show you some recent examples. Let's start off with stocks. This is a recent chart of ZTS going back from the end of October to the beginning of November. Now, our overall proprietary tool told us that the trend was up. And as you can see here, this was a nice upward move. Now, if we add the PET-D, because looking at this, where would we have gotten in? I mean, it would have been nice to get in somewhere around here, but how do we know price was going to stop somewhere around here? So we add the PET-D, and we see here a series of red bars. That's okay. This is not the beginning of a new downtrend. This is just the pullback phase. Now at this point, we had our first green bar, so this was our signal to buy, roughly around 36, and the stock shot up to 44 in the next 2 or 3 weeks. It was that simple in ZTS. We didn't have to look at any news. We didn't care what the overall market was doing. We didn't look at support and resistance. We just followed the bars. How about ABX? Obviously in a downtrend since August, okay? It's easy to see that going into the first week in November. So how could we have taken advantage of these little bounces? Here was a nice pullback to the upside. Who would have minded getting short right here at the top? And then as we move lower, could we have gotten in again? Well, we simply apply the PET D. Here's the downtrend in red, and we start to have a series of green bars. This is simply the pullback. Once this pullback is in play, we just wait for the first red bar to give us confirmation, which was right here. And then we had another sell-off, another green bar. If you missed this first one, well, you could have gotten into the second one, and look at the nice downward move that ensued after that. How about a weekly chart of the E-mini? Now, if we look back to the beginning of 2013, as you see in these charts, this is a weekly time frame. All right, this is going up until this week, I believe, or the first week in November. Now, obviously, we have been going up. We've been in a clear-cut uptrend for the past nearly 2 years. Our proprietary tool even told us that as well. We're in an uptrend. So this means we're only looking to go long. We're not even going to consider shorting the E-mini on a weekly basis. It represents the S&P 500 until our overall tool tells us that we are in a downtrend. So if we're in an uptrend, as we are here in this current chart, this means we're only looking to buy on the pullbacks. And we see here a number of pullbacks here. Here's here, here, here. Wouldn't have been nice to buy on these little pullbacks, but how would we have known? After all, everyone with all the news going on in the world, all the global and economic news, it's very frightening to think that once this starts rolling over, why are you going to buy there? This may be the beginning of the top. Well, we apply the PET D, and once we apply it, we see the majority of bars are green, but we want to get long, are red, are green, but then we have a splash of red every once in a while. See here, there's a little red there, there's one red, two red, and the first green bar that appears after is your signal to buy. In fact, our latest signal was at the very beginning of October on a weekly basis. So we caught, when the market was falling out of bed in October, a lot of people were swearing that this was the end of the nice bull market and we're topping out. But we flashed another buy signal, and you would still be long this according to this particular setup here. Now, this was a weekly chart of the E-mini. This could also apply to a 10-minute chart. Here's last week, the first week of November, on a 10-minute time frame. The initial part of this day, we were going up, and then we later started to go down even into the next day. So if you had enough capital to carry positions overnight, what you could have done was apply the PET D, and as you see here, what you want to do is buy on these pullbacks. The first green that appears is your buy setup. And then once the trend changed, as we see here, now we look for the pullback to the upside and the first red bar that appears. So on this 10-minute time frame, you could have had two nice buy signals. Then once the trend changed, you switch over and you could have gone short and carried it over into the next day. And we were talking about a good 10 to 20 points are made here in 2 days. That's $1,000 just trading one contract. And then we can also apply this to the currency pairs. I know there's a lot of Forex traders out there that love to trade currency pairs. Well, here's a chart of the dollar-yen. As we see here, we are in clear uptrend. Okay, so we're looking for pullbacks to the downside. We want to just purchase on these pullbacks that go lower. As you see here, here's a minor one where we rallied and then pulled back. And then we had a major pullback where we rallied and then sold off here and then continued its upward direction. How would we have known to purchase somewhere down around these levels and then to purchase again somewhere around here on this daily chart of the dollar-yen? Well, we simply apply the PET D, and as you can see, the PET D can be applied to candlesticks very simply. It can be applied to any kind of chart you're looking at. And we have a series of green bars followed by 3 red bars, but we're still in an uptrend, so we only look for the first green bar, and that's right here. That was our signal to go long, and you could have taken advantage of this nice move up to the upside. And then the trend, the overall trend was still up. We had a series of red bars. This is only the pullback taking place on the first green bar that ensued. That's your signal to enter, and you could have taken advantage of this. This is literally thousands of dollars you could have made on these 2 signals had you taken them just using this simple technique. And then we can apply this to intraday trading of the currency pairs. Here's a 4-hour chart of the euro dollar. Obviously in a downtrend, but we have some really nice pullbacks here. Here's a downward move. Here's a pullback. another downward move, another pullback. How could we have taken advantage of going short at these higher levels? Well, we apply the PET D to the candlestick charts. The first red bar that appears after a series of green is your sell signal. Now, we're not going to sit here and tell you that every signal is perfect. Here's a perfect example of that. You would have gone short on this, and this would have turned into a loss, a minor loss, if you had a tight stop here. So it doesn't work 100% of the time, but I've just showed you some current charts where in all markets, in all time frames, so it would be too difficult to try and just cherry pick a couple of them. You're going to see these all over the place, and as I stated, our members swear by this technique. They really enjoyed some great success. We even have a member who trades this technique in the Indian markets, which we don't even follow or cover, and he says it works fantastic in those markets as well. So let's recap before we go into question and answer. We showed you the wrong way, in our opinion, to trade pullbacks. And we know that, a lot of people swear by these techniques. These are conventional wisdom has told us that you've got to trade support and resistance. You've got to use volume. You've got to see what the big guys are doing in order to tell you what to do. You've also got to look at Fibonacci. It works tremendously. Well, as I stated, I know traders who do very well trading these techniques, but the majority of traders I know, myself included, do not do well because there's no consistency. They're very subjective techniques. One trader can come up with one scenario and another trader can come up with another scenario. So we don't teach or subscribe to that type of trading at Specialist Trading. We want everyone to look at the same chart and say, well, we're in an uptrend. Therefore, we all go long on the first green bar that appears after a red bar. And that's it. And everyone will see the same thing. Two people cannot look at the same bar and see two different colors. It's always going to be either green or red. So we want things to be more cut and dry and not as subjective. So we share with you a simple but high probability technique for trading pullbacks in all markets and in all time frames. Now, this is our PET D course. PET D stands for the Primo Early Trend Detector. It's a proprietary tool. I'm sorry, we cannot divulge or go into the actual rules. I can just share with you that it's based off momentum. It's a momentum tool that was taught to me on the floor some 30 years ago when I was trading on the floor of the exchange. It's very simple to calculate. It's a formula. The only trouble is we have had so much success with this. We have hedge funds that are seriously considering licensing this, and we may go into some type of licensing form with this. So it's that valuable. We don't want people taking the rules and then selling it or sharing it with their friends. It's really that important of a tool. So this is our PET D course. It's a roadmap for any market, a proprietary color bar algorithm. Now the course includes the add-on that automatically changes the colors from green to red. As you saw, I applied this not only to open, high, low, close bars, but also to candlesticks. So it works in any type of charting platform you may be using there as well. We give you two continuation trading techniques as well as pullback techniques and a stop technique in the course. Now here's the deal. I know a lot of people say, well, Steve, this looks great and this looks like a great technique for me to apply and use, but I don't really have a strategy. Either I've been trading for some time and nothing has worked for me, and I've thrown all my strategies out the window. Everything I've paid good money for doesn't work. Or else someone may be new to trading and they don't actually have a strategy yet. They're looking for structure, some clear-cut rules. Well, remember, the PET D is not a complete strategy. It's simply a trend identifier. Okay? In order to have a complete strategy, you need advanced entry rules, you need exit rules, you need money management techniques. These do not come with the PET D. It's just a great way of identifying or confirming the trend and identifying signals that are already in place. So this is what we're doing because of our devotion to all of our attendees, and to help you, we want to give you a 2-for-1 attendee special. We're going to throw in, for the price of just the PET D, we're also throwing in our Momentum Trader, which is strategy number 4. This is our most popular strategy today. We have people that have been trading for 2 weeks that trade this. We also have people that have been trading for 20 years, hedge fund managers, stock traders that I used to know on the floor that trade this particular strategy. This is probably one of our best strategies, and it works tremendously with the PET D. Let me show you some recent trading examples and share with you how well it works. Here's an example from just about 3 weeks ago in ROST. This was a strategy number 4 signal for this particular issue. As we can see here, it looks as if the market was kind of rangy, going down, going back up, going down and up. But according to the proprietary rules of this strategy, it generated a buy signal on the 16th of October. Okay, now One of the best ways we know of applying the PET D is to confirm a strategy number 4 signal. We call this our dynamic duo because strategy number 4 is one of our most consistent strategies, but when you add the PET D to it, you simply ramp up the odds for success. So if you get a buy signal, you want to apply the PET D and make sure that that signal bar is green, because that will confirm that most likely it's going to continue in the same direction. So if we apply the PET D, well, we see here that the bar is green. Okay, so we would have entered either on 10:16 or 10:17 if we wanted to wait for the next day, and then look what happened. Why? Because we had confirmation from the PET D. Now this works the same way if we're going short. Here's a sell signal a couple of months ago in Textron on the 29th going into October, the 29th of September. Okay, according to the proprietary rules of strategy number 4, it deemed that this was a signal to go short. But let's say you just want to have a little bit more confidence. Well, you add the PET D and you want to make sure that that bar is colored red. So we add the PET D and we see here that it is colored red. So this would give you the confidence to take the trade. It's not a guarantee that this trade is going to, make you millions of dollars. It's just giving you the confidence that you're in sync with the trend. So look what would have happened had you gone short Textron in the following couple of weeks. Here's another great advantage of using strategy number 4 along with the PET D, because many times it will actually keep you out of losing trades. As we stated, there's no one technique or strategy that works 99.9% of the time. But as long as you have a nice consistency to a method and some high level of probability of success, you'll do well. So when we add these two together, we can see that we really have this nice level of consistency. Now we had 3 signals generated in Urban, URBN. The first was a buy signal that, as you can see, worked very well. But coming into September, the market started to head lower, and strategy number 4 generated 2 buy signals. And each one would have been a loser. So how could the PET D have helped us? Well, remember, we want buy signals to be colored green. We want sell signals to be colored red. If they're out of sync, then you shouldn't take the trade. So we add the PET D, and we see here that this was colored green. So this gave us the confidence to take the trade, and it worked out very well. Now the next 2 signals that occurred in Urban, both buy signals, should have been colored green as well, and look, they were colored red. So had you had the PET D to confirm this particular strategy signal, you would have bypassed these signals altogether and stayed on the sidelines, and it would have been a good deal if you had, because look what happened to Urban. This is how powerful the PET D is in confirming signals, not just pullbacks, but actual strategy signals. Now we've just looked at some stocks. Excuse me. This can also be generated on intraday time frames. Let's look at an E-mini chart, a 60-minute chart of the E-mini going back to this past week. This was a week ago today. On an hourly time frame, we had 3 buy signals. If you wanted to just make sure that you were in sync with the trend, all you had to do was add the PET D, and all signals were colored green, so this gave you the confidence to take the trade. You would have made roughly entered 10 or 15 points on average taking these trades in just 2 or 3 days of trading. Now, this also works in the currency pairs. Here are 3 sell signals in the British pound. Obviously, looking in hindsight, they all worked out very well. But at the time, sometimes it gets a little nervous. We know that many of you rely on outside sources to tell you what and what not to do. You're accustomed to going to a trade room or a chat room to tell you where to buy, where to sell. With the PET D, you don't have to worry about that anymore. You simply apply the PET D, and all sell signals should be colored red. As you see here, every setup bar was colored red, and it gave you the confidence to take the trade. Now remember, the PET D can be applied not only to strategy number 4, but to any strategy you currently use. So let's say you have a strategy that you like, it's performing all right. Well, this, we feel, can improve your odds for success simply by coloring your signals in sync with the actual signal that's being generated. But we really feel strongly that you'll do well with strategy number 4 because, as we stated, it's one of our most consistent strategies, even by itself. Even for traders who only trade it alone, they still do very well. So this is a great 2-for-1 attendee special. You get instant course access. You can be up and running as early as today if you like. And remember, in the strategy, we teach you all the entries, all the exits and stops, the signal alerts. This includes both add-ons. In other words, your arrows will be produced when a signal is generated, and your bars will change color if you apply the PET D. Now, these are 2 of our probably most popular and often purchased techniques and strategies. And if you purchase these together, most likely it would cost you close to $2,500, but we're dropping the price. for all of our attendees down $500 down to $19.95. And realize that it still may be expensive for some people, so we have payment plans available. This is called our dynamic duo simply because they're so dynamic when used together. So if you're really interested about taking your trading to the next level, and if you look back and see that you haven't done as well as you'd wanted to this past year, we really strongly suggest you take advantage of this deep discount at $19.95. In actuality, next year these may be going for double this price, closer to $5,000 for both of them together. Remember, we may seriously be moving over to licensing out the Pet D next year. That means you would have to probably pay on a quarterly basis. So once you pay this one-time fee and you've included either once or you pay payment plans, this is yours for life. You don't have to continue paying over and over again. So for more information on purchasing the Dynamic Duo or any of my courses or techniques, you can go to Pro Trader Strategies. That is our sister site, and that's the site that markets and promotes all of my individual courses and techniques. You can email any one of their trading consultants at trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677. Now, I want to thank you all for waiting for any questions. So let's just spend the last 10 or 15 minutes answering any questions you may have as I begin to lose my voice here. Thank you for putting up with my voice. Any questions? Let's see. First question, as always, is this being recorded? Yes, it is. Here's the contact information. If you want to watch this again, just call or email any one of the trading consultants, and they will send you the link to that. As well, if you look on your chat box right now, the little box in the far right-hand corner underneath chat, you will see a link that takes you directly to the discounted deal for the Dynamic Duo. So you can, if you're serious about just automatically purchasing it, you can click on that link and it will automatically take you there, and you can be up and running in just a matter of moments with both of these techniques, the Pet D and strategy number 4. Remember, if you're really serious about purchasing these but you don't have the $19.95, don't worry. Our trading consultants can put together and devise some type of payment plan for you so that you can still get the information with just a down payment. Okay? Serge asks, do you identify the trend using daily bars only? No, Serge, we identify the trend with any time frame. And one of the things which is our philosophy is that we only are concerned with the chart we're looking at. I know a lot of traders love to look at a higher time frame to tell them what to do on the lower time frame. And there's nothing wrong with it. That's fine. But we don't require that at Specialist Trading. We tell our students, only trade the chart you're looking at. So if you're looking at a 5-minute time frame, then our indicators or our tools, which tell you the overall trend, are only concerned with the trend of that 5-minute time frame. All right. If you're looking at daily bars, well, then our proprietary tools are only concerned with identifying the trend on the daily bars. We don't care what the weekly or the monthly are doing, and vice versa. Okay. So yes, we're concerned with the trend of the chart we are currently trading. That's pretty much it. Roger asks, Steve, why isn't the buy-sell line showing? Hi, Roger. Well, the reason why is we don't want to stress too much and give away too much for the people that have purchased the strategy courses. But the buy-sell line is simply another tool which tells us about the overall trend. And we'll go into that in another presentation. Okay? But the buy-sell line is simply a way of determining the overall trend. But what we wanted to make sure is that you learned how to use the Pet D with the short-term trend. Okay? Now, one of the things that we say and we suggest is that if you want to trade more conservatively, you can use our buy-sell line along with the Pet D, or if you want to trade more aggressively, you can simply use the Pet D. You don't have to use. So they're not required to be used with each other. Okay? Roger also asks, are typical slopes and targets still in place when using the Pet D? Yes, Roger. In other words, the rules do not change other than we're using the Pet D as a confirmation tool. That's it. It's just something to give us more confidence to take the trade or to tell us that the pullback has concluded. All right, we're using it to confirm that the trend has resumed. Or if we're using it with the strategy number 4 signal, we're using it just to confirm that the signal is in sync with the trend. It's a really great tool. I use it on a daily basis. I used it today. In fact, I used it today just about a half hour before the close. The market sold off really sharply, but the overall trend was still up, and then we had a really sharp upward green bar. and that was my confirmation to get in, and made a quick point or two. And if I had stayed in, I could have made a quick 5 points if I stayed in the E-mini. And that's how simple it is. I was using the same technique I shared with you today. Stefan asks, is there a way to get a demo to test the indicator? I'm sorry, Stefan, we don't give that out because, remember, this is a great tool. We feel that strongly about it. It's something I use, and if we give it away as a demo, there are so many people that we found in the past with our products that try to back test and try to reverse engineer it and then sell it themselves or give it to all their friends, and we just don't want to do that. Our integrity and our experience is really our guarantee, and to let you know that it works. And we're this is not just something that we give to you and say, well, good luck. We are an educational website. We give it to you, and then we stay with you and teach you how to use this, and tell you in emails and converse with you so that you'll know how to use it properly. Okay. Jim asks, can you use this on any platform? The basic platforms you can use it on, as you see here, are MT4, Metastock, TradeStation, Sierra Charts, and NinjaTrader. Thinkorswim users can also use a free NinjaTrader hookup, and our tech support will show you how to do that, and then you can just simply apply the data that you get and apply it to a free NinjaTrader, and it works on that as well. Okay. Roger says, Steve, looking back at Urban chart, could one buy a put option at the first red bar? Yes, good question, Roger. I'm glad you brought that up. We know that there are a number of traders who don't actually purchase equities or purchase futures, but what they like to do is trade options. There's nothing wrong with that. If you want, all you have to do is just say the minute you get a signal, rather than actually purchase the stock, all you have to do is purchase a long call or go long a put. It's that easy. Now, if you have a strategy that you feel works that would go well in that direction, some type of spread, that's fine as well. We're not an option class, so we don't really give you option strategies or techniques, but we have a number of members who just take the signals and they trade options off of them. Now, one technique that I can share with you is that many traders, option traders, like those large moves. So rather than just taking 1 or 2 points, it won't really transfer onto a large gain if you're trading options. They only take weekly signals. This gives them much larger moves. So different ways in which to trade. But yes, we have a lot of traders who trade only options on these signals. Let's see, P. Vidal asks, will it work on tick charts? Yes, it will. That example I shared with you today where I went long prior to the close of today was on a tick chart of the E-mini. It was on a 1,000 tick bar chart. So you can use it on tick charts, sure. Works all the time. Let's see, another question here. How do you determine whether it is a pullback and not a trend change? That's a good question. We have our overall trend identifier. That's the buy-sell line telling us what the overall trend is. So most likely, we're not going to tell you, it works 100%, but it really gets us in sync with the overall trend. So we know if we are in an uptrend or a downtrend by applying the overall trend tool, which is our buy-sell line. Once we know that, then we simply look for pullbacks or these little opposite moves in the trend. And then we wait. We're not going to simply try and buy a bottom or sell a top, because that's a recipe for disaster. Because even using our tools, if we try and pick a top or bottom, it may continue to go higher and higher, and we may now turn into a valid uptrend when we were in the overall downtrend. And vice versa, if we pick a limit hoping that it's going to stop there, even though we're in an overall uptrend, if it continues to go lower and lower, we may turn into an overall downtrend. So we wait for confirmation, and that's where the PET D comes in. So we have a tool that tells us the overall trend, and then we go to the PET D to tell us the short-term trend. Okay, it's that simple. And remember, these proprietary tools and techniques are extremely simple. It's not some convoluted indicator that you have to come up with or some neural network. Very basic stuff, as any of our members can tell you. Extremely simple. Let me go down further here to add in some more questions. They're very good questions. I'm glad these questions are coming in. Stefan is also asking, is PayPal also supported? Yes, it is. Let's see. Let's see. Can I use this also for stocks? Well, yes, Stefan, I showed a number. That's why I kind of paused there for a minute, because I showed roughly about 5 or 6 techniques applying it with stocks. this program likes the layout overall, or can it only use as a trader program? Well, yes, Stefan, it works well with stocks. I'm not sure exactly what the question is pertaining to. Maybe you have something else in mind, but it's just basically a way to make sure that you understand the process. But yes, you can use this for stocks. This is very simple to use with stocks. Let's see, what else do we have here? L.A. Decker says, I did not look over the shoulder with Pro Trader Strategies and was really impressed. Oh, well, thank you. We'll be joining Monday or Tuesday next week. Thanks for keeping this offer open this year. I have seen FX examples on the D1 and H4 charts. Yes, I know you say any time frame, but I have not seen a 30-minute or on an FX trade examples. Is there any reason for that? Oh, well, first of all, I want to thank you for your future purchase, and I look forward to you becoming a member of Specialist Trading. No, there's no reason. I mean, there are so many time frames. I mean, there's literally, you could use 1, 2, 3, 4, 5, 6, 7, 8-minute time frames. You could use 30-minute. You could use tick charts, range chart. I mean, there's just so many because of the amount of presentations I give on a daily basis. Because of trying to trade myself, I just don't get to every time frame allotted. But trust me, we have traders who traded on 30-minute time frames that do well, and it works. I have never had any complaints in terms of its consistency. Please remember, nothing works 100% of the time, but we give you all this in the course training session, so you'll be able to increase your odds for success. Okay. Okay, we're just about at the end. Let's see. Stefan is asking, what is the difference for 1995? I have the program without the courses. That's something you'd have to, Stefan, for 1995, that's what, if you just wanted to purchase the Pet D, that's what the price would be. But we're throwing in the actual course of one of our most popular courses, which is strategy number 4. I use strategy number 4 as well. This is a great technique. We have hedge fund managers that just trade strategy number 4. That's a great technique, so we're throwing that in. So normally, 1995 would just cover the cost of the Pet D, but we're also throwing in strategy number 4 because we realize there are a lot of people that do not have any type of strategy, or they're frustrated with what they've been using. So we feel very confident about having the two together, as we showed you in today's examples, okay? Greg asked, does it work on eSignal? You know, Greg, I don't use eSignal, but I believe it may. That's a question I would probably ask the people at Pro Trader Strategies. They have lots of good resources and know how to do and set up. And in fact, I think that it says right there, yes, you should be able to use it through eSignal data to run on NinjaTrader. Okay, so that's another thing. You can run it on NinjaTrader just using the eSignal data. So there's lots of ways to get around it. And remember, the NinjaTrader platform is totally free. So it's not like you're going to have to spend extra money in order to trade it if you only have eSignal or Thinkorswim. Okay. Matt is asking, how do you avoid chop? Well, remember, chop is just price of doing business. Everyone has chop and everyone has a difficulty with chop. But remember, if we're looking for the overall trend and we're looking for the short-term trend, if the Pet D is deciding what the short-term trend is, it's going to oscillate back and forth between green and red. And therefore, you won't get a lot of confirmation in signals or telling you that a trend has concluded, because you won't see a series of green or red bars. So that's the beauty of these trend identifiers. You'll see what is happening in the market. Red, black, red green, red, green, red, green. And right there off the bat tells you there are no signals being generated and we are in no type of trending formation. So it'll keep you out of a lot. Also, strategy number 4 is designed to take its signals generated from a particular trend, or I should say pattern recognition. And you can only get this pattern recognition if there is some type of trend in place. So once again, you will not most likely generate that many signals in a choppy market. So that's the beauty of these two techniques put together. They can't avoid chop 100% of the time. There's no way you can do it. But you have certain techniques in these two methodologies that can keep you out of the chop a lot. As I showed you in a couple of those examples, in that urban example, that was kind of a choppy downward move, and strategy number 4 generated 2 buy signals, but it was not confirmed in the Pet D. So many times one will keep you out of the other. Okay? You're more than welcome, Matt. Once again, we would not promote or try to sell anything that we don't use ourselves. These are things I've used for years. I continue to use them, so I stand by them because I really feel that strongly in them. And I just want you, before we close here, to think this past year, how your trading has been. If it hasn't been what you thought it was going to be, think of January, how positive and how confident you were about the following year, and look back at your trading results. If they're not where you think they should have been, where you had all these hopes and dreams for this year, then I strongly suggest you take advantage of this discount. Remember, we have payment plans because you want to start 2015 on a good note where you feel confident, where you feel you can reach and achieve that level of consistency that everyone is searching for. It's not about how much money you can make because, trust me, I know tons of traders who made tons of money and then lost it all. So it's not about some fly-by-night system or strategy. It's more about a technique or a strategy that will help you achieve consistency so that you can trade 20, 30, 40 years down the road. That's what we're interested in, okay? So this is what we're trying to instill in you, and this is what we're hoping that you can achieve with our program, okay? So in conclusion, remember, if you're interested, please contact the people at Pro Trader Strategies. You can email them at trading@protraderstrategies.com, and you can call them directly at area code 310-598-6677 because that deal will not last long, okay? It's discounted greatly as well. We're also giving you the payment plan. In conclusion, I ask that you take one last look at our disclaimer, and thank you so much for joining us. I look forward to all of you becoming students of mine, and I look forward to all of you becoming members of Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.